Welcome back, Money Masters. Today we are talking about some of the best kept secrets about taxes that will keep more money in your pocket legally and out of the hands of Uncle Sam. Many have associated tax loopholes and deductions with illicit activity, but the reality is they are great ways to save. And if you don't know these tips, you'll end up paying more in the long run. Consider your business structure. By the time you roll around to your first tax season, you've likely already decided how to structure and register your business. If you choose to file as self-employed, your taxes are filed a lot differently than if you have formed and filed a limited liability company or LLC. While there can be benefits to both, you might consider doing some research and making the leap to form an LLC if you qualify. An LLC is also appealing because it is considered a pass-through entity and offers you a ton of flexibility when filing your taxes. You see, limited liability companies can elect to file their taxes as an S corporation. An S corporation is a taxation filing method where you pay yourself a salary and all other expenses pass through a distribution of business income process. This distribution is not subject to FICA taxes, and your wages are no longer taxed as self-employed. Usually, it is a good idea for an LLC to be taxed as S Corp if the operating income is over $30,000 to $40,000. Because you are an employee of the LLC, you are technically not self-employed. This allows you to file personal taxes like an LLC employee and keep your business taxes separate. This can save you tons in state and federal taxes, which in our book sounds like a great thing. Maximize your QBI deduction. Want to maximize your savings with your new LLC? Listen up to this tip. The S Corporation has another slick advantage over filing as self-employed. By filing as an LLC or S Corporation, owners can deduct 20% of their total business income on their individual tax returns. To qualify, you do have to earn less than $315,000 if filing as a couple, and less than $157,000 if filing alone. This deduction is called a QBI deduction. QBI stands for Qualified Business Income Deduction, and it is definitely a term to know if you're looking to reduce your taxes. The QBI deduction can be a bit tricky your first time filing. Your unique business will likely have very specific deductions and paperwork, so looking for a qualified tax preparer might serve you well here. Regardless, finding someone to help you take advantage of your LLC's QBI deduction is well worth the time and cost. Consider Section 179. Another significant deduction worth looking into? Section 179 deductions help you deduct your major business purchases, such as your vehicle, computers, equipment, and tools. So we all know that starting a business can cost a lot of money. Your expenses only grow if you own a business that needs expensive equipment or a dedicated vehicle. Luckily, recent developments in the Tax Cuts and Jobs Act changed the game for small business owners. Section 179 of the IRS Tax Code describes how you can get an immediate tax break when they finance, lease, or purchase new equipment for your business. Before Section 179, business owners could not claim new equipment. They could only claim the depreciating value bit by bit with each year of tax filing. This results in smaller deductions, which can hurt a new small business. Section 129 allows you to maximize your savings early on to give your business the fighting chance it deserves through qualifying tax deductions. Did you know about this last year when you bought your business vehicle? Don't worry, you can still get some benefit by claiming your yearly asset depreciation tax deduction. Save for retirement and your pocket. Our next tip is perfect for everyone, even those who aren't running a business. Saving for retirement is all about preparing for a future when you no longer need to or can work. Retirement can be the time of your life if you save consistently, save wisely, and invest in a traditional or Roth IRA. A major benefit of contributing to a Roth IRA is the ability to contribute up to $6,500 towards your retirement each year tax-free. When putting money into savings for retirement, it reduces the yearly tax burden since the funds are not taxed until they are removed from the account. Under the age of 50, you are allowed to claim $5,500 in contributions. Over 50, that increases to $6,500 per year. Another incredible saving option is the self-employed 401k or solo 401k. This is a saving option that allows for you to contribute even more towards your retirement and can be an excellent way to defer payment in order to reduce your yearly taxes. In 2020 and 2021, the individual 401k allowed people to contribute either $19,500 or 100% of their income, whichever was less. However, if you are over 50, this is increased to a total of $26,000 per year. A key point, however, is that you cannot incorporate your business unless you claim the contributions as business expenses. If you do not incorporate, you can instead apply the deduction to your personal taxes, increase your savings, and decrease your tax burden. Know your deductions. Deductions. We love the word, and you should too. Deductions are the #1 way you can save money when filing taxes, and many people don't know what they can and cannot claim. However, many people miss out on some of the deductions that can save them the most money. Tons of everyday business expenses can be claimed if you just know what to watch out for. Some standard missed deductions are car usage expenses, cell phone costs, 50% of meal and entertainment expenses when meeting with clients, operational costs, and even setting up saving accounts. Depending on your business, many unusual expenses could be deducted. For example, your hairstylist fees if you need that for your job appearance, a portion of your travel costs if you're doing business, or even half of your meals while on the road for work. A tax preparer can help you find the best deductions for you, or you can start researching now and prepare for next year, receipts in hand. Employ your family. Do you love your family? Enough to give them a job? Do you have a few teens at home? Well, we have good news for you. Employing a family member is an excellent way for sole proprietorships to save money on taxes and keep the money in the family, so to speak. Children are taxed at a lower rate than adults, and they do not get taxed on Social Security, Medicare taxes, nor unemployment taxes. Additionally, you can claim a deduction on your own taxes for wages paid, and in essence, receive a lower tax rate on the wages you pay for your child. Children can earn up to $12,200 federal tax-free, so start thinking about your deductions as a family. Educational expenses. Speaking of the kids, why not set a good example and go back to school? It could result in even more deductions if the coursework you're taking is related to your business. Classes, certificate programs, and even workshops can be deducted from your taxes and help you out in the long run. Need a special license to operate your business? You can deduct testing fees, test prep, and even the gas you use to get to the testing location. Need to buy books and teach yourself a new business skill? Those are deductions too. While this is the final deduction we'll talk about on our list, it can be one of the most helpful, as an investment in yourself is an investment in your business's future. Use the right software. Now that we know all about the deductions that can help you the most, we should consider how to best file these deductions and keep track of the expenses that matter. This is where technology is your friend. Picking the right software for expense tracking is one of the first expenses you should consider when starting a business. A popular option, QuickBooks, offers wide availability, detailed expense tracking, and even the ability to track and bill clients directly. There are many options, so be sure to choose the right one for your business. Another important software? What you use to calculate and file your taxes. Paper filing is a thing of the past for the most part, as they are likely to have a 21% margin of error. Online filing has become the easiest and most reliable way to file taxes, and the margin for error is less than 1% with IRS-approved tax software. Again, choosing the right one for your business as well as state and local tax needs is essential. Hobby or business. So, you launched a business that is your absolute passion. But is it a business you're running or a hobby? In the eyes of the IRS, they are both very different. If you are running a business, the IRS will need to see 3 profitable years out of your first 5 years. If this is not possible, don't worry. The IRS will allow you to keep your business status so long as you have detailed records and filings of all your income and expenses. But let's say they deem it as a profitable hobby and not a business. Well, you immediately limit your deductions to the amount you make each year. You are limited by your profits, and thus it can be hard to let your earnings work for you. This can be extremely limiting, so if you start a business, make sure it's a business, not a hobby. New year, new taxes. Our final tip on the list might help you feel a little more holiday cheer this year. So, We know that the tax year runs the length of a calendar year, so it only makes sense that December is the month you should try to make as many sales and billing as possible, right? Wrong. If you're dealing around the holidays, if you can delay billing a few days, you also delay payment a few days. This extra time could, in theory, be timed out so that work completed in December actually counts towards the following year's tax burden. This results in a lower overall income, which can accelerate and increase the results of your deductions. Alternatively, you can also benefit from paying January bills in December. You can claim them on the previous year's tax filings while enjoying the benefits during the following tax year. Do a combination of both, and now we're talking. We hope these tips today have opened your mind to the possibilities and give you some options to protect your money, make sound financial decisions, and prepare for next year's tax filing season. To make sure these strategies work for you, always consult with your CPA or tax consultant. If you learned something new, please smash that like button and subscribe for our weekly money tips to increase your financial IQ.